morning, traders. It's 8:01 a.m. on Tuesday, the 8th of December, 2015. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight news, pretty negative news coming out of Asia. Some positive with Japan reporting its final Q3 GDP Q on Q at 0.3% versus 0%, annualized GDP at 1% versus 0.2%. This causes Japan to narrowly avoid the being called in a technical recession. But the bad news was on the China November trade balance data came in at 54.1 versus 64 billion. Missing by quite a bit. This was a 4-month low. China's trade surplus narrowed to 343 billion yuan. November exports slumped 3.7% compared with last year, and imports fell 5.6%. In response to the data, the Chinese yuan slipped 0.2% to 6.4179 per dollar. This is the weakest finish since August 2011, and we could see the reaction in the overnight trade. That information came out at about 7:30 or so Central. The UK October manufacturing production month-on-month came in at negative 0.4 versus negative 0.2. It came out worse. Year-on-year negative 0.1% versus 0. Again, we see some volatility when a number came out and a sell-off. The world's largest miner, Anglo American, is cutting about 85,000 jobs and shedding 60% of its assets by 2007. You need to keep an eye on that sort of thing when you have commodities and basically fundamental sectors cutting back and getting hammered, even though it lowers prices on energy and materials. And going back and looking at a correlation chart, I noted that we generally don't do too well once energy drops, and energy tends to drop early. I'm not blowing the horn for bears or anything like that. I'm not a perma bear. I really couldn't care less which way the market went. Actually, I do. I prefer trades on the sell side because of their speed and efficiency. But I don't have a negative view on the market, and I don't have a positive view on the market. I just trade whatever the market happens to do in that day, because my time frame for trading is so small, is so short. I don't have exposure that lasts long enough to sit around and form a long-term macro opinion. It's just not my game, and I do my best to play at my strengths. But overall, when you look at a long-term crude oil chart and superimpose, put a percent line on top of it for the S&P 500, you'll see that generally it looks like there's no correlation, but generally some time passes and then you end up with a pullback in the S&P. If the world's not consuming as much energy, then something's got to be slowing down, is probably the logic. Looking at what we have for today, we just have one or two releases at 9 o'clock Central, 10 Eastern. We have the U.S. JOLTS job openings for October, expecting 5.540 million, and IBD tip economic optimism expecting 45. I don't see any significant speakers or other releases, so the calendar is pretty clear. Now, reminder that Tuesdays have been very active lately. So yesterday was expected to be a pretty lazy, quiet day. It didn't turn out to be that way. Generally, right after the NFP we end up with a very quiet trade. What yesterday did, let's look at that. What yesterday did, what yesterday was expected to do, was to be responsive, to push up into the point of control, which is the normal habit. Have you noticed that it hasn't been doing that at all? The prior day it did the same thing. It was expected to push down, close the point of control and the gap, and then consolidate and then push up. That was Friday. It just pushed up. Yesterday was expected to push up into the 2089.50. The expectation was also for it to check this low volume zone here. Find a base. So the expectation actually was would open, come down, test the 78.50, and then find its way to 2089.50, and then take out this trend day high from the day before, which is what commonly happens in a normal auction. But lately things have been very, very interesting in that, in fact, if we look at the overnight session here, it might show up more clearly. So if we look at the overnight session, oh my God, that's a lot of noise. So let's clean that up. So if we look at the overnight session, so the gray profiles are day session profiles. The blue profiles are night session profiles. What the market's been doing is it's been coming in, and so here's an up day, consolidation, down. Then overnight it takes a lot of that back, or all of it back, and then the day session comes and down. And then the night session comes and it pulls some of that back. The next day we have a rally. This was Friday. And then the night session yesterday was fairly quiet until the open, and then it took all of that back. Then we closed higher yesterday. We closed pretty strong yesterday, even though it was a selling day. Then we take that back. This is typical balance. So what are we doing this around? We're doing this around the 2080. Oh my God, that's a terrible line. The 2080.50 area. If you recall, this is a key area here at 2080.50. It's the point of control, the long-term point of control, and essentially what the market's been doing is just bouncing around it. Is it something that we expect it to do? Yes, it is, but it's been pretty strong. The ranges have been a little bit larger than normal, or testing the edge of normal, and the overnight sessions have been fairly active as well. So it's been a very, very whippy trade is the point I'm making there. So yesterday we ended up getting some really strong clues. I don't like the periodicity here. It's a lot of noise. I don't know, the charts look a little bit noisy, but I'm switching to a 4-tick Renko so we can slow the chart down. There we go. So we open up in an open auction out of range. Okay. I set the opening swing as down there, but you could argue for 2080.50. Tested the 2080.50, the MC point of control early on, and what we end up getting is, until it pulls back and fails right here at near the mid, and starts swinging down, we pretty much don't know if it's likely to test and then go up. But what it did is, we did not get any responsive buying. We did not test the prior point of control. We stayed within the day's range. We stayed below this mid pretty much all day. We tested it once and that was it. Basically, sellers were completely in control. The delta did not show that early on. Delta did not show early on that we have some strong selling. I mean, we ended up dropping, but at its worst, it got down to negative 13,000. It's really not that strong a selling range, a selling push, given that it dropped 20 points from the high to the low. We went from 2085.50 down to 2064 something. So 64.50. So 21 points, but very little delta. So as this market was moving down, either the bids were being pulled and the sellers were not strong aggressors, or buyers were buying as sellers were hitting the bid as well. So we don't see the delta pushing down. So it seemed like there was some potential accumulation there, but sellers were not super aggressive, or buyers were pushing back the sellers as price was dropping. In other words, accumulating over a wide range, which is very common for a higher time frame. Higher time frames do not execute at one price. And so pretty quiet all afternoon, very choppy through most of the session. The point of control kept shifting down, and then we test. This was actually the cleanest setup of the day here, right here. The initial test of the point of control with the mid and VWAP backing it up right here. So right at 74.50. At the top with the IB low at 74. This rotation here gave us about 10 ticks, 10 points or 9 points, and then from there on out, it was just really noisy. The only other potential setup is the push up, the pullback, which should end up pulling back to the IB low again. Expected it a little bit lower for the finish. Other than that, it's just sitting around and waiting for the market to kind of give us an idea of what the next swing is. And the expectation on a day after trend is to consolidate, push to test the trend high, and then consolidate some more, and then slowly skew its way up. But we're not getting that. We're getting trend up, trend down, trend up, trend down. The market is fluctuating quite heavily. And looking at the long-term picture, let's clean this up. If I take if I go from the most recent high to yesterday and look at what it has done volume-wise, essentially it has traded quite a bit. You can see this strong kurtosis here at 69.50. At 69.50. In addition to the bigger one at 2080, the market's got this really comfortable area between 2080, 2085, and 2070, and that's the area to watch. If we push back in there, we're currently trading at 2056 quarter right here. You'll see this moving up and down. If we push back into the 70 and pull back and go in, then I'm looking for that 2080 test again this morning. Otherwise, the market looks like it's dominated by sellers for now. And looking at the higher time frame, composite, let's pull that forward. You can see that we're still at 2080.75. The market has done an amazing job transitioning from the top to the bottom and then retesting these. You can see it testing the LVNs here, pulling back, pushing through, and it's just it's tested these areas pretty cleanly and a lot. And right now we're trading down into this zone here after consolidation yesterday. So when you look at the bigger picture, we've moved away again from this area, and it's just being that we are on balance, it's really hard to tell whether we re-attract to 2080 or we start moving down into these lower volume areas. Which is my suspicion. My suspicion now is that we have taken a high swing, dropped, lower high, consolidation, and then now we're looking for looking to extend. We have the energy to extend the lower swing down into that 2026 or 2030 area below. So that's what I'm looking for, but the trade lately has been such that you have to sit and pay attention to what it's doing on the open and how it's behaving, who's taking control, and looking for clues early. Again, yesterday's clues, the open auction was broken to the downside, unable to get responsive and push up into the closing price and into the point of control, and then it just basically the bigger rotations were downwards, with shallow rotations going up, and so the bias has to be to the downside. I mean, it's easy to talk about it now. I know that, but I did mention it in the S5 chat room as it was happening, to just be cautious on the long side. Longs are scalps, shorts are targeting lower prices, are stronger. But overall, you could see that the swings here, the market just failed to take out that last high, and has reverted back to the point of control. And now we've got a consolidation that's resolved itself downwards. Okay, so this energy that was built yesterday is likely to take us down into this most recent low from last Thursday, and the expectation is we end up testing 2030 over the next couple of days. Tuesdays have been very active, so this is a day where you might not want to stubbornly battle the market. You want to go with the flow. The Tuesdays have been very pushy. They've been actually the higher trend probability of the week has been on Tuesday over the last couple months, so pay attention to that. Anyway, I don't have much more to tell you. I'll leave you with that. I know it's a confusing set of context reads, but the bottom line is we do have what we need. We do have what we need to break lower with some energy. We are trading a little bit lower right now, and the expectation is if it's not able to respond, and this is a primary hypothesis, if it's not able to respond early on to the buy side, this is what we have to pay attention to. What quality do we get from the buyers early on? Then it's likely to rotate down, test this lower consolidation, and aim for 2030 as the next low volume node, and that becomes a key target below. That's 20 points away. I'm not saying we'll cover it today, although it's possible, but it's definitely out there. And so the target for me on the sell side is going to be this consolidation, or bigger picture zipper, as I would call it. So I'll leave you with that. Good luck today, and I'll catch you tomorrow. Take care.